Let's jump straight in. We're looking at the incredibly high-stakes 2026 summit in Beijing, Trump and Xi. Now, you probably heard the dramatic media spin about two major, powerful nations coming together to rule the rest of the countries. But let's be real. What we're actually seeing are two superpowers colliding to dictate the global economic trajectory. The stakes here? Absolutely massive. The whole world is holding its breath to see if we're plunging into a trade war escalation or finally getting a strategic thaw.
But look, before a single pen hit paper, they were walking a razor-thin geopolitical tightrope. Xi Jinping looked right across the table and made it crystal clear. Quote, Taiwan independence and cross-strait peace are as irreconcilable as fire and water. End quote. That's a stark, uncompromising warning delivered right out of the gate to the U.S. delegation. It shows you exactly how fragile the foundation of this whole summit really was.
So how do we navigate this? Well, today is all about elevating your financial literacy. We're going to take these incredibly tense, high-level diplomatic maneuvers and decode them into crystal-clear, actionable market insights. The goal here is simple. We block out the geopolitical noise and lock in our strategic focus.
And that brings us to the actual breakthrough, the Kuala Lumpur Joint Arrangement. This is the crucial China and U.S. mutual agreement that was hammered out right before everyone sat down in Beijing. You might be wondering, why Kuala Lumpur? Because neutral ground signals serious cooperation. Simply put, this is the exact de-escalation that global institutional investors have been praying for.
Let's channel that modern investor essence and break down the hard numbers. It's a reciprocal deal. The U.S. is dropping cumulative tariffs by 10%, specifically targeting goods linked to fentanyl precursor enforcement. That gives them the political cover they need back home. In exchange, China hits pause on their retaliatory measures slated for March 2025, bringing their tariff rate on U.S. exports down to 21.9%. Finally, global supply chains can actually take a breath.
Now, to unlock the massive tech breakthroughs, they had to deliver on the traditional economic boosters first. They're calling these the 3 Bs: beef, Boeing, and beans. We're talking expanded market access for U.S. beef, a massive commitment from China to buy 200 Boeing jets, and an agreement to purchase 25 million metric tons of U.S. soybeans every year from 2026 to 2028. These are the headline political wins required to get to the real prize.
Section 1, the tech catalyst, unfreezing semiconductors. This right here acts as the ultimate sector or industry growth accelerator due to bilateral agreement. Just look at the timeline of this thaw. Starting in November 2025, China agrees to lift export controls on rare earths and gallium. Fast forward to the summit itself. China officially drops its retaliation against the U.S. semiconductor firm Nexperia. And on the flip side, by May 2026, the U.S. clears advanced H200 AI chips for 10 Chinese firms. Fun fact, NVIDIA CEO Jensen Huang was literally picked up in Alaska to fly on Air Force One just to help secure these vital AI breakthroughs. Let's turn your AI confusion into AI confidence right here, right now. Why should you care about rare earths, gallium, germanium, or antimony? Because these critical minerals are the literal, unglamorous backbone of our entire technological future. You simply cannot fabricate advanced semiconductors, scale up AI data centers, or build blockchain infrastructure without them. When these materials are banned, the tech world chokes, but when they are unbanned, it runs.
And the macro thaw effect? It's immediate. You see, when the existential dread of a massive trade war drops, institutional capital doesn't just sit on the sidelines. It rapidly rotates out of safe haven cash and treasuries and flows heavily into risk assets. We are talking major inflows into tech and major inflows into crypto.
Section 2, market impact. Let's take a closer look at the crypto and equity market in USA and China market.
For the crypto and AI spaces, this is a monumental structural shift. It's simple math. Cheaper hardware equals better economics. Eliminating export controls on those rare earths we just talked about drastically reduces the manufacturing cost pressures for specialized chips. That directly juices the profitability and the expansion potential for Bitcoin mining operations and AI computation networks across the globe.
But hold on, let's take a step back and look at the contrarian view for a second. Do not get blinded by the hype. This is a tactical truce. It is not a permanent peace. The structural competition between these two superpowers absolutely remains intact. Keep in mind, the U.S. Congress is still actively pushing bills to restrict AI development in China. So treat this detente for what it is, a temporary pause while both sides fortify their long-term positions.
So what is in there for investor? That is the ultimate question for our community, right? How exactly do you play this macro market shift without getting absolutely burned by a sudden geopolitical reversal?
The smart play here is to spot the next boomer in infrastructure. By identifying these newly unblocked semiconductor and crypto supply chains, you can position yourself way ahead of the curve. You want to look closely at the companies processing those rare earths. Look at the hardware manufacturers whose profit margins just got a massive boost. And absolutely look at the decentralized networks that rely on that hardware to scale.
But please, remember our core philosophy here. Patience over hype, time the right entry. You absolutely must invest when time is right. We've all seen massive trade deals that look fantastic on paper, only to completely fall apart in practice. You need to monitor whether China actually issues those general licenses for rare earths in reality, not just in a splashy press release. Wait for the hard confirmation, and only then make your move.
To wrap up this explainer, I want to leave you with one final provocative thought. The truce is signed, the 3 Bs are secured, and the tariffs have been adjusted. But as we watch these critical minerals finally unfreeze, who truly holds the leverage in the next massive wave of the AI and tech race? Take that question with you, keep doing your research, and stay focused.